Hi, everyone. Welcome to the Real Estate Private Equity Show. I'm your host, 𝗖𝗽𝗶 Benesocky, and I'm joined by my co-host, 𝗖𝗣𝗶 Biniaz. We're really excited today because we have Kelly Ehler with us. Guys, before we get started with the show, if you could please like and subscribe, as it helps us build our channel and allows us to keep bringing you great content and expert guest speakers.
As everyone knows, you're not paying a fee to be here today. I don't think we even have those little commercials before a YouTube show starts. So all we ask is to like and subscribe. We go out there and find the best guests to bring on and add value to your journeys. And today we're excited about our guest because it's a little bit outside of our real estate guests who come and talk mainly multifamily and real estate private equity. We're going to be discussing building companies, his journey in business, and we're going to be discussing this concept of CFO, Chief Financial Officer, and Fractional CFO, where you could cool. Bring in a person to help you with your endeavors. But yeah, awesome. So
super cool. A little bit about Kelly, guys. He's an experienced executive, advisor, and board member with a track record of transforming and elevating companies by improving their processes and business practices so they can reach new levels of success. He turns great ideas into successful companies by sitting at the intersection of finance and operations. So August and I believe this interview with Kelly is going to bring great value to real estate business owners looking to scale their companies by aligning with great advisors. So thanks for being here today, Kelly.
Thank you. It's a real pleasure to be here, and I really appreciate you having me on your show. And August, it's truly an honor that you've asked me to be here and kind of share my experience over the years, and I'm happy to kind of share that with everybody.
Absolutely. Honor is all ours, especially with all the credentials you got back home. We had the pleasure of meeting you in Toronto recently at our investor dinner. So a big pleasure. But yeah, Kelly, please kind of go way back and start kind of your journey in business, because I think that will set up a kind of great background into kind of our discussions about CFO and all the other items.
Sure. Just a quick comment on the designations. I'm an education junkie as well. So my philosophy has been to, constantly learn, and that translates into business, obviously, and then not just learn, but how to actually utilize it in business for improvement. So, my career started with Price Waterhouse, and I'm going to date myself. This was like 1984.
Is that TD Waterhouse now, or is that?
No, Price Waterhouse. No, today's like PwC, Price Waterhouse Coopers.
Got it.
But back in my day, it was just like Price Waterhouse, and then they merged with Coopers Lybrand, and it became PwC.
Got it.
So it was like, downtown Toronto, typical kind of, large, companies. But that's where I also got my first taste of real estate, and my love for real estate was with Price Waterhouse, with Cadillac Fairview and Royal LePage, which I don't think is around anymore. But great experience kind of on the audit, because and this will all kind of tie in together as we kind of talk. The beauty of like a large organization audit firm like Price Waterhouse is you learn processes and systems, and you learn documentation, and it's kind of like you go through university. I always see universities about learning how to think, and then when you start with a company like Price Waterhouse or any large organization, whether you're on the marketing side, banking side, sales side, you're developing techniques and processes to help you kind of think through. So I spent some time with Price Waterhouse, and from there I decided to go into banking. And the reason for banking was, for me personally, it was like when you're into banking, you're forward thinking, as opposed to when you're an auditor, you're sort of looking at the past. And I'm always kind of looking to the future in terms of how can things improve in the future. So banking became very interesting because it provided the element of, dealing with individuals, dealing with customers, looking at, use my accounting skills, my finance skills. In terms of legal documents, it gave all kinds of experience in terms of legal documents, structuring transactions. So 10 years of lending money to, again, primarily all real estate. So I was, lending to, this is in like Ontario primarily, and it would have been, condo developers with land banking, land development, house construction, commercial mortgages, and kind of later in some of my banking career was just like regular kind of operating businesses. And the interesting thing about being a banker, and every type of career path you choose, there's a certain culture to it. And with banking, one of the things that really taught me was, as a bank, the idea is you lend money, you're not risk takers. I mean, you're looking for a return, but you want your money back. So in order to do that, you're going to look at financial reporting, and this is going to be really key to, sort of like my end comments in terms of for companies who are looking to scale, financial reporting and management. So if you have good management and good financial reporting, the probability of success is quite high. And so as a banker, you would see sort of the range of good and bad in both categories. So you learn kind of like, it's almost like through osmosis, you pick up tidbits and philosophies of different successful people in terms of how they made their money. So I spent 10 years in banking, and then kind of realized that I'm a little bit more entrepreneurial, and decided that maybe I should move to the CFO route.
Very cool.
So from banking, one of my clients was in the automotive sector with car dealerships, but there's like 13 car dealerships and several body shops and an auto leasing company, and owned all the real estate. So it was a pretty sizable, like $500 million plus organization, and I came in as CFO. And the banks, his bankers essentially said, we need a CFO. And so, with my sort of accounting and banking background, it became like an ideal situation. So in terms of like, one of the things that that I do is kind of get the financial reporting so that the banks are like really happy. But then it's also like, let's go to I call it my financial engineering. And I like this particular example because it's sort of like a proud moment with this particular company. Is when I was there, you kind of look at financial statements, and part of what you're doing is you're looking at how do we grow the business, how do we save taxes, how do we ensure our bank lines of credit are good. And there were two really strong accomplishments I felt I made there. Was one is I got Bank of Montreal Capital Corp to put equity money in to grow the leasing business, and it was based on a business plan. So my role was to build the business plan, and I said it was one of the best plans they'd ever seen in terms of documentation. But the other thing that had like a direct major impact, and I'm going to keep referring to banking in many respects, like the financing side of things. So these companies, there was like a lot of Japanese manufacturers, and his year ends were like March 31st. And Tokyo or in Japan, I mean, their year end is March. So what they would do is they dump a lot of inventory onto the company. And with your bank covenants, you got like debt equity ratios and financial ratios, and so he looked bad from a financial presentation perspective. He looked bad because there's always all this extra inventory and his leverage looked too high. So I changed the year ends of the companies, and this sounds like simplistic, but I changed it to August, where his inventory was almost totally depleted. Now all of a sudden, his financial statement showed 2-to-1 debt to equity when his credit lines allow 8-to-1. So when it goes to like these credit departments, they're looking at it going, "You're a superstar."
Yeah.
But a minor little change of just kind of looking at seasonality of your business and determining how does seasonality affect sort of your financial structuring. So from there, then I actually went to another client who was he's now the majority owner of Morguard Corporation, and many people I'm sure listening to this will know Morguard Corporation or 𝗖𝗽 𝗖𝗽, and just being around somebody like that who came to Canada in 1974 with nothing, and today is a multi-billionaire through mergers and acquisitions and huge real estate holdings in the country. You just kind of pick up a lot of really kind of solid experience. And I mean, the way things finished there was like specific projects I was working on, and then it became like you could be one of my corporate guys, or maybe you're more entrepreneurial. And I said, yeah, I'm a little bit more entrepreneurial. And then ended up in the tech sector when the internet.com boom was going, and became CFO, and it's like an acquisition strategy to go buy companies, and how do we scale the company? How do we basically consolidate in the industry? And we focused on North American manufacturing companies to buy different manufacturers selling to like Time Warner, AT&T, Rogers, etc. When 9/11 occurred, revenues dropped 80%, and then it was like, okay, basically we got let go. And that was the beginning of my own sort of self-employment career as fractional CFO. So in 2002, that's when I started just to go on my own. And over the course of the years, just through relationships, Ernst & Young was like a huge supporter in terms of providing, if they had a mess that needed to be cleaned up, then I was the guy that kind of went in to clean it up. But also got involved with during this journey, a hedge fund for a number of years, and part of that role was to sit on the board of companies that were in sub-Saharan Africa and Sri Lanka, multiple public companies. Also looked at, we basically did the back office in terms of pre-IPO work for a lot of these companies in terms of positioning the company. So it comes down to like the financial reporting. So as like, that CFO role, the way I got involved with the hedge fund was, for those who know like accounting, the audit report was qualified, which, for an investment fund, a qualified report is like the kiss of death. And, I basically said, there's no way that should have ever happened. And so came in, brought Deloitte in, got the proper valuation reports. And, from there, it just became like an evolution of helping companies go public, capital pool companies, RTOs, sitting on the boards of companies. And I still deal with the group today on a lesser scale because he's focused on one particular project. But then on the scaling of companies, then, as a CFO for a cannabis company, which was, I looked at the cannabis sector as, when it was first coming out, it was like, I don't understand it. And, but it was like very interesting because to me, it was like, I like complexity. And it was like, okay, how do you, if you have something complex and it's kind of new and it's, kind of not really organized, then, how do you get it organized? Like, how do you, take something that's, never really existed as an industry, like a legal industry. And, my role was to basically get the company public and go through the first round of acquisitions. And then from there, it's like, how do we scale? And, again, it comes down to, your financial reporting in order to, satisfy investors that they can understand what you're doing. But the financial reporting in terms of how to scale a business is really critical, because if you don't know your costs, and this is one of the lessons I learned as a banker, that this is, I would say, probably one of the most critical lessons I learned was, what can you control and what can't you control? And typically, you've got control over your costs. Like, what you're going to spend your money on. You're the owner, you're cutting the check, you're signing the check. But the marketplace, you don't control the marketplace. Like, what can you actually sell for? Like, I've seen the mistake in the late 80s when, sorry to say this, when real estate crashed in the late 80s, early 90s. I dealt with some developers thought they controlled the marketplace.
20% interest rate. I mean, people are, they're pulling their hair out at 2%, 20% back then. For sure. But it's like, if you understand your cost structure, and that comes down to financial reporting, like, you can't run by the seat of your pants. So, if you understand your cost structure, and the market's going to dictate what you're able to sell things for. So, if you're going to look at margins and profitability, then you really have to have a handle on, like, that financial reporting becomes really critical in terms of, if I want to scale this business, what's it going to cost me? And then, one of the things that us finance guys, we get criticized for, but we kind of offset marketing people really well, because what we're always looking at is we're saying, okay, if I'm going to spend money on marketing or sales, like, what's my IRR? What's my return? How do I measure it? What's, how it's going to improve my sales? I mean, there's many ways to measure those metrics too. Like, so for example, the two of you as founders of the company, you need like admin assistance, because it doesn't justify your time. So even though they don't directly contribute to revenue, they indirectly contribute to revenue, because it frees up your time to focus on your leadership skills and the skills you have to actually grow the business. So cost is not always about, a person kind of generating revenue, but it's also like creating efficiencies within the organization so that you can scale. Amazing. Yeah.
Nice. I like that.
And I've been involved with a couple other startups where, again, it really comes down to, that kind of management. Can they execute on the plan? Do they have a track record? Mm-hmm. And on the financial reporting, they understand, you got to understand the marketplace, but you have to understand your costs in order to know, okay, how do we scale? And, dealing with investors, obviously, they want to know that you have the ability to execute on your plans and that you have realistic plans.
Absolutely.
Amazing. Lots to unpack there. But allow me to put a focus on M&As, right? Mergers and acquisitions. So kind of making the comparison with a real estate private equity firm. I mean, we established CPI Capital, which is a real estate private equity firm. Early on, we knew that we're going to need access to equity. We're going to need access to deals. We're going to need to manage all of this. So those are the two main components. We're going to be in real estate investing. We're going to buy multifamily asset, institutional, and the equity was going to come from retail and potentially institutional investors, and we were going to have an operational company that was going to manage the whole dynamic of the business. When you're discussing mergers and acquisitions, can a company be formed to focus on mergers and acquisitions, or is just mergers and acquisition a process which companies take to buy other companies, or is it all within the same space? I know large firms like the Blackstones, the KKRs, the Apollos of the world, that's how they build their companies, by mergers and acquisitions, in some cases hostile takeovers. But is mergers and acquisitions just a process, or is that a business model? If you could dissect that a bit more for us.
It's both. It could be both. So, I mean, on the one hand, like for example, the cannabis company that I was involved with, the two individuals who founded it, they were one of the first, licensee holders in Canada. So they did sort of like the organic, got the license, grew it, sold out, made good money. And then this company was round two for them. And it was like a US focus, and it was purely for M&A. So there was like no operation, but because these two individuals had success kind of round one, I call it, that they had institutional backers who looked at them and said, you were successful round one. You guys, we think you're good management. We're gonna basically invest based on your success in the past. And this company raised millions of dollars without a single operating business. And it was solely because it was going to be acquiring companies. And actually, the IPO was based on M&A. It was basically like we found, 3 companies that we would like to have. And the whole IPO was basically, it wouldn't close without closing those acquisitions. So there's a company where it's already based on purely M&A. And then there's other companies, I've been involved with another, public company that's been around for 20 years. And, it's kind of like they reach a certain point where if they want to continue to grow, you have that debate between organic growth. Do I hire more salespeople? Do I open up branch offices? Like, how do I penetrate the market to grow the business? Or do I go acquire other companies? Because if, by acquiring other companies, then you can accelerate your growth. And then the analysis then, becomes, time and return. How quickly, can I get return on my investment? How quickly can I grow the business? Because every business should be thinking about, how do I continue to grow? Like if you're not kind of looking at process improvement or growing your business all the time, then there's like fresh young competitors who are going to be nipping at your heels to take over your business. So you have to just, I think, constantly look at, how do I kind of grow this business? And you do it either organically or through acquisitions. And then on the acquisition side, then you got to kind of really look at, what do you know about the marketplace, and are you doing like a horizontal acquisitions or vertical acquisitions, to see what part of, are you buying your suppliers, or are you buying your competition? Competition would be your horizontal, suppliers would be your vertical. And what's sort of like the best strategy for you in terms of growth and making money?
Got it. No, absolutely. Great.
That's cool. I learned something new today.
Yeah, definitely. So now let's put a focus on CFO.
I was just gonna
expand on what it chief financial officer is, and then now I got to share a quick story. Is we were planning to bring on a CFO who is one of our current advisors and team leaders, and say, hey, you have your MBA, you've been involved in finance, you've been involved in many other companies. We'd love you to come on board and be our CFO. And then he sat down with us. He explained to us what CFO is and how much risk is on the CFO's neck when it comes to companies and building companies. And soon we realized that, okay, so we're going to rethink this. We're going to kind of grow the company a bit more before we're bringing you on. But it kind of gave us the realization of what a focal point a CFO is on a company, because everything, all the finances has to go through the CFO, and the strategies have to be built by CFO. So talk to us about what a CFO is, and then we'll kind of dovetail into this concept of fractional CFO, which is a new concept that we're probably going to be utilizing as well. as well
that
at
we're
some
going to be
point.
learning more about. Yeah.
Yeah, well, I've never been considered risk averse, so I think where we were speaking to, I think I've been more kind of like kind of outside the box kind of thinking in terms of, I kind of look at, to put it very simplistically, I look at it as I go back to my cost kind of component in financial reporting. I want to make sure that I've got really kind of solid financial reporting, and I really look at data analytics too in terms of like understanding my own company. And then it's like, then I got, the bigger picture in terms of strategy. Like now that I've created like a core kind of financial statement, financial reporting, and because that information is knowledge, it's information about your marketplace. And like, I can think of a current public company that I'm involved with that there is so much data that the opportunities. So for me, the more I understand, like in terms of the detail, then it just kind of creates ideas as to, strategically speaking, how do I use that data to grow the business? What are the opportunities and threats for it? I mean, you can kind of go through your, like we do, like, not only just budgets, but typically like a strategic plan for the year to look at, what do we want to do for over the course of the next year? What are the opportunities? What are the growth opportunities? And how are we going to accomplish it? Because the one thing that's, it's so easy to do is, prepare a spreadsheet that looks beautiful. But I always say, like, for me as a good CFO, it's like, how do you actually execute on it? It's one thing to, talk a good story, but how are you actually going to implement and execute on it? And what are the resources that we have within the company in order to do that? So to me, the CFO role is a much broader role than purely, having a good bookkeeper and a controller, preparing those, like the numbers on a financial statement. Because if you see public companies, the notes to the financial statements are 5 times longer than the actual financial statements themselves. There's like sometimes like 30 pages of documentation. And if you get into mergers and acquisitions, there's like a whole another level of complexity in terms of valuations and how you structure, if you have different subsidiaries, like how you structure your subsidiaries, and like in terms of potentially cross-selling within them. So it can be quite complex. And so to me, the role of the CFO is to kind of look at, give me the good detail. I need a good staff to give me the proper kind of reporting in detail. And then how do I support my CEO, my board of directors to grow the business? And where do I kind of see the growth of the business, and how do we execute on the strategy?
Amazing. And now let's talk about a fractional CFO.
Yeah, and fractional CFO. No, I have a question for you. So a lot of companies that you talked about working with had either exited, had access to a lot of capital to then venture onto a new company, or you talked about the motor vehicle company, which was already an operational, cash flowing, well-established company. Can companies, for example, like, which is kind of that in the border of being a startup and being cash flowing, which is still being built, obviously it's going to be difficult for them to bring on a full-time CFO, which could obviously will cost. And the first question is, will a CFO just come onto a recently established company? But then also there's a significant cost to having somebody and paying a salary. So maybe we can connect those to the idea of fractional CFO. And
I like, because if it's like full time, like if it's like a fractional, I mean, the word fractional means fractional. Some companies, like I've been approached even like in the past year where really it's like full-time jobs. So it doesn't really kind of suit sort of like the fractional. So to me, the idea of fractional is that, have your quality sort of accounting, financial reporting internally. Like that's to me is like a commodity where there's quality people who can do your bookkeeping, they can do like the financial reporting. And then, like, to me, like, for example, there's one other public company that I've been involved with for a number of years. I was brought in because their person kind of left without notice. And when I went in, it was like a bit of a mess. So I, essentially had to bring in some additional staff who were, quality kind of controllers, director of finance. And then my time dissipated down to like, a couple hours a week sort of thing. So to me, as a fractional CFO, it's kind of like, what do you need as a company? And I'm going to like analyze the company and say, here are ideas, like with, kind of 30+ years of experience, I've got a lot of ideas or things that can help companies that, I don't have to go through the learning process. So what you're getting from a fractional CFO with kind of more years under our belt is we've been through so many things that, we can maybe think of things that's, it's like it only takes it like an hour or two, or, you only need someone like myself, like, maybe like once, like I got some people where it's like, I get together once a year. So to me, the whole idea is like, it's what do you need? There's all kinds of concepts for a fractional CFO. There, many are like kind of like flat fee, or they want a certain number of days. Whereas my own personal model is just kind of like hourly, and like I'm only going to do what you need to get done. Like there's a lot I have to offer, and if you want to take advantage of it, take advantage of it. If you don't want to take advantage of it, then you don't have to.
Yeah, and you have so much experience that you can come into a company and say, hey, you guys need to focus on this, you need to focus on that, and really kind of put strategic plans into place on
Yes.
where they should start and how much time they actually need you for as well.
Yeah, and you touched on this briefly, but I want to touch on it a bit more. Is initially when you connect with a company that you're looking to work with, early stage like CPI or a well-established company, would you say that there's a period of a strategic audit when you come in to figure out what's happening, what's going on, like give them some homework to do, or kind of figure out where they're at?
Yeah, there's definitely like an initial kind of startup phase. Like it depends on the industry too. So for example, like with respect to real estate, I've been doing it all my life. So there's really kind of like no real kind of startup understanding required. It's like I've been doing it like from all aspects of, preparing tax returns to financial statements to, I used to be a real estate lender, a real estate auditor. I mean, like the only thing I haven't done is built houses. So, but if it's another industry, like I had a little project not too long ago. It was in the US, and it was in like a wireless space, like in terms of spectrum. And it was like a lot of issues, but it was that I needed some time to kind of, get some, both industry understanding, and then, just kind of, dive into, some of like the financial reporting issues.
Right.
So if it's somebody who's already in the industry, then it's really like, it shouldn't like take a lot of time. It really depends on, it's almost like you're getting like a board advisor with a lot of experience who can kind of do deep dive if necessary.
Great.
Right.
Excellent. One more question or a couple more questions before we get to the next one of our
absolutely.
show. So I want to talk about, again, going back to the role of a CFO, obviously, and I keep using CPI Capital as an example because it is in that kind of sweet spot of a company. So it'd be kind of perfect case example to use. Obviously, access to capital is a very important part of our business. Access to capital through private equity, through retail, in our case, accredited investors, and currently we've had an institutional investors who've invested with us. So would you say a role of a CFO also encompasses either some communications with those investors or also expanding the investor base of a company? Does a CFO get involved in that aspect at all?
I mean, every company, every like CEO is different, but my own view is that you should have the CFO involved in both existing investors as well as new investors. Because I'll go back to my original comment, as a banker, one of the things that people are looking for is good financial reporting. So for existing investors and for new investors, if they have the comfort that your back office is well taken care of, and you have like a CFO who understands your industry and your business, it's going to give them a lot of comfort. I mean, they may not even talk about it, but it's one of those tick the box things that, you've avoided any kind of conversation that's, is there some kind of, mess in the house that needs to be cleaned up? If they know that you've got some quality people, on that sort of finance function, then it's going to give them comfort. And I think meeting investors as well as talking to new investors is, I think it's a good thing for the CFO to do, because we're also perceived as being very conservative and risk averse. So they like to talk to the CFO to kind of like, so what's my downside? They're like, what's the risk here? Because, often, CEOs will be promotional. They'll be like, super positive about everything and not necessarily, talk about what is the potential downside. Whereas the expectation is the CFO, we're sort of branded with that kind of perception that, we're somewhat negative, or we're looking at the downside, which I mean, we're trained to kind of to do that too. So I'm not saying we don't.
Great. So it's the fact of just having a CFO is probably a very important thing for a company, but also for optics. It looks great because, you know, if you don't have one, you know, you don't have somebody kind of overseeing the bookkeeper, the whole accounting side of it. And also Kelly touched on that, you know, when banks looking to lend or companies looking to grow, having that kind of very well established and organized financial side of a company is extremely important, both on the bookkeeping and growth side of it. Amazing. A lot of stuff we learned here.
Yeah, a lot of stuff we learned today, Kelly. Thank you so much.
Let's move.
That's what happens when you bring on somebody who has lots of experience. You can, I'm sure we could talk for hours.
Well, let's get to know about him a bit more here, and we're going to get to our next segment of our show.
The 10 championship rounds to financial freedom. So whatever comes top of mind, Kelly, and then I'll just get started with the first question here. Okay, who was the most influential person in your life?
So I'm going to do the typical accountant thing. Are you talking about from a business side or a personal side?
It doesn't. The questions are somewhat vague when it comes to exactly precisely where. But say whatever that comes to your mind, whatever you feel like. It doesn't have to be finance related. It could be whatever.
Well, the person that came to my mind was like actually 𝗖𝗽𝗶𝘁, the guy that owns Morguard. Like it's not like I had a lot of like. I mean, I was basically like, you know, the office next to him, but just such an interesting man and just such a successful man, and just it was almost like through osmosis, just kind of observing what he did. You know, I just found like it was like really just kind of amazing having that experience. And there was like so many little like for example, one of the he had so many expressions which I really liked, and one of them was, if you want a quick answer, it's no. And because it's like he just took his time when it came to acquisitions, or even if it looked like it was quick, it wasn't really quick because he'd already had this cumulative knowledge. But that was like one of the things that you know, always stuck with me. And the other thing that's, you know, just like as a life experience from him was, don't worry about opportunities. There's always future opportunities. There's always another deal. And I mean, that applies not just to business, but it applies to life in general. Like if something doesn't work out for whatever reason, well, don't fuss about it. Like just there's always going to be another opportunity. Just maintain a positive attitude and keep pushing forward.
Amazing. And forgive me, what was his name again?
𝗖𝗽𝗶𝘁.
𝗖𝗽𝗶𝘁.
He's the CEO of Morguard.
Morguard.
Yeah.
Okay.
All
Amazing.
right.
Amazing.
Okay, Kelly, what is the #1 book you recommend?
#1 book. I hate to say it, I just typically read technical material.
Nice.
Well, actually, the book I think I liked the most was Red Notice. Red Notice was about, I think it was, what was that? The Hermitage hedge fund, and it was all about, you know, when the walls came down and you know, communism ended, and you know, so he went into like kind of Poland and Russia, and you know, and then sort of how Russia kind of evolved into like Putin, and just like Red Notice is like sort of it's a legal term in terms of you're on the what do you call it, Interpol, like you're like the most wanted person in the world.
Wow.
Okay.
And this is like a true story, and there's actually a law that was created in the US as a result of this kind of whole experience this hedge fund guy had. And it's just, the book was just so fascinating. You pick it up and you read it and you just can't put it down.
Yeah. Oh,
Amazing.
interesting. All
Okay,
right.
we
Red
gotta get
Notice.
that.
Yeah. I guess I was going to say he'd be interested in that one. Okay. Now, next question, Kelly. If you had the opportunity to travel back in time, what advice would you give your younger self?
Find a mentor.
Oh, nice.
I just found I never had a mentor, and I really could have used, like I just kind of made a lot of mistakes, and but it would have been nice to have somebody kind of guide a little bit. And so yeah, if you could find a mentor, I think would be invaluable.
Amazing.
Amazing.
All right. What's the best investment you've ever made?
The best investment, my kids' education comes to mind. You know, I've got one that lives in Paris, works for World Health, and my son lives in New York, working for the NASDAQ company, and I'm just like very proud of them. And I put them through private schools, and you know, my son speaks Mandarin, and you know, their languages. You know, there's just yeah, I'm just very proud.
Amazing.
That's beautiful.
Amazing. Yeah, self-development and
Yeah.
education is a lot of time we get that investment answer instead of it being a monetary investment. But yeah.
I love that. All right. Now, what's the worst of it? Oh, yeah.
So they give you my best stock when it was actually truly the cannabis company went from like $2.60 to $48 in a year.
Oh, nice. Okay, that sounds pretty
You got in
awesome.
early with the cannabis. Some people got
No,
in.
no, that was actually just right after COVID. It was,
Oh,
no,
really?
it was
Oh,
yeah.
wow. Okay.
Good for you.
Amazing.
Right on.
Amazing. Knowing
Okay.
the right people, right? Probably.
Knowing the right people, yeah. Kelly, what's the worst investment you've ever made, and what lesson did you learn from it?
The worst investment, probably buying a car in university and not having the money to actually be able to afford driving a car.
Nice. Yeah, that would be a bad one. Nice. Next question. How much would you need in the bank to retire today? What's your number?
You know what? This is like a interesting question because I don't have a number. Let me say that, because my own personality is if I achieve one goal, then I'm always looking at what's the next. So actually, I had this conversation recently about when I was a banker. When you deal with entrepreneurs, like some people it's 5 million is enough for them. Some people it's 20 million is enough. Ray 𝗖𝗽, for example, I don't think there's a dollar amount that's enough. It's not about the dollar amount. It's just about, like, when I left him, he was maybe worth $100 million, and now he's worth $2 or $3 billion. And I said to him at that time, you're going to be like a multi-billionaire, because just kind of like some people they just want to keep going. So I don't know where my dollar number is.
And that's
Let's
okay.
talk in 5 years and see where I'm at.
Yeah, love it. Okay, perfect. Next question. If you could have dinner with someone dead or alive, who would it be?
Somebody dead or alive. I don't know. Nobody's coming to mind, to be honest with you.
We really get people thinking on this show, hey?
Yeah,
Okay.
absolutely. Yeah, it could be a historical figure. It could be a sports figure. It could be some person. It could be
I think like a Michael Jordan. Because I'm a big basketball fan, and I watched the documentary on him, and I think that would be pretty awesome to be able to have like a dinner with him and just kind of reflect on the show that that he had. And
Awesome.
Super cool.
We've had
what I really like about some of these athletes, where I really got an appreciation, is that they were super talented to start with, and they had the attitude of keep getting better. They never kind of rested on their laurels. I'm already like amazing. They're like, okay, maybe I'm amazing, but maybe I can get better. Like even Kobe Bryant would be another example of somebody who he just constantly worked on getting better.
Yeah.
Like I really admire people who just have that perpetual sort of let me get better. And I try to kind of emulate that in life as well.
Amazing. Absolutely. We're learning that lots here. It's internally.
Yeah.
The more books we read, the more we realize that we don't know much. So
and we read more.
Well, that's one of my other expressions. The more I know, the less I know.
Oh, it's so true. It's so true, Kelly. Okay. Next question. If you weren't doing what you're doing today, what would you be doing now?
I don't know. I like what I'm doing. So
Yeah.
I don't know. When I was a kid, I said it's either going to be an accountant or a lawyer. So maybe I'd be a lawyer today.
Okay. Nice.
All right.
Nice.
Great.
Okay, Kelly, book smarts or street smarts?
I think I got probably more street smarts than book. I've got both, but I think I just got a good sense of kind of good street smarts, I think.
All right.
Got it.
Okay, last question. If you had $1 million cash and you had to make one investment today, what would it be?
And I'm going to emphasize on this question. So it's $1 million cash. You can only make one investment, and you have to do it today. I mean, the markets have closed, but today, tomorrow, let's say, we'll give you 24 hours. What would it be?
I'd probably find either, this is going to sound strange, but I probably wouldn't put it into too much of anything right now, because I think probably be like some bond that provides like very short term, or like a corporate bond where it's kind of like a decent yield. And the reason I say it is because I think there is like a huge uncertainty in the world right now, and also with rising rates. That just, like, for example, on a personal level, I'm thinking of buying like a condo, like a bigger place than what I have. And I'm thinking I'm not going to do anything for at least until the fall or maybe even next year, because there's just so much uncertainty in the world right now. So I can't say, you know, other than just I'm probably taking, even though I say I'm a risk taker. I mean, this particular case, it's like the Warren Buffett thing. You know, when everybody is like fearful, that's when you buy. And I think there's a lot of fear yet to come. So I just want to be prepared for the fear.
Okay.
Great,
Awesome.
great answer. So he advertised to be, you know, a risk taker, but he gave one of the most risk-averse answers: buying bonds
Yes.
or hold off. So that's
Yes.
great, awesome, man. Hey, we really appreciate you coming on today. We're gonna probably seek some of your services in near future. So I really appreciated your transparency, all your wisdom. Maybe you can also share with our audience how people can reach out to you, possibly on LinkedIn or other platforms.
Sure. I mean, LinkedIn, yeah, or just my email. I mean, I'm more of an email and LinkedIn person than not so much a phone person, but definitely.
And
LinkedIn.
What is your email? If this is going to be in a podcast, so maybe you can verbally say if your email, if you like.
Sure, it's Ehler, so KEHLER at yourcfo.ca. So I mean, I'm your CFO.
Amazing,
Fantastic.
amazing,
Awesome,
awesome.
Kelly. Thanks for being such an incredible guest and sharing all your wisdom with us.
Thank you.
Thank you. Thanks for having me. I really appreciate it.
Absolutely.